Do you want to know the secrets of professional traders, which ICT traders need to know in order to unlock the markets? As you know, I'm ex-Goldman Sachs, ex-JP Morgan. I spent a number of years on the trading floor at Goldman Sachs. Post-MBA, I was an investment banker where I floated a real estate investment trust on the LSE. So not only have I spent years speaking to algo strats on the trading floor at Goldman, I also have IPO'd firms and understand how the markets work. In this video, I am going to teach you a concept which will change the way you view price. The narrative that we're sold is smart money traders target retail traders, and they use retail traders to fuel their trades. This is complete nonsense, okay? The liquidity generated by retail traders is minuscule. It will not feed the orders that institutional traders and institutional banks and the big hedge funds need. Instead, they're fighting each other. They are targeting each other's stop losses and they are protecting their own positions. Once you understand who the big player is and where they have entered their trade and which areas they are willing to defend, trading is so much easier. Forget about daily bias and institutional order flow. It's all about understanding whose liquidity has been taken and who is now protecting their stop. Okay, the person who is protecting their stop is the one you want to align your trades with. I don't care what the weekly time frame is saying in terms of bias. I don't care what the monthly is. I don't care what the yearly is. I don't care what the daily is. I just want to know for the time frame I'm trading, who is in control, whose stop has been taken, who is protecting their position. Okay, because if they are protecting their position, if I have the same position as them, they are effectively protecting my position also. So let's go through some very important concepts first. I'm going to show you a chart, which I shared with my mentorship group, about 6 months ago. I'm going to show you exactly how this works. So these are the weekly charts, okay? NQ, ES, YM. I have marked out the price action for 2024, okay? And we are in 2025. Let me show you exactly how this works. You will see that the high of 2024 for YM was swept. This happened back in January 2025. What does this effectively mean? All these stop losses from the institutions that went short prematurely were targeted by a bigger institution. Essentially, the bigger institution forced price up in the series of a few weeks, took all of their stops. So these guys were forced to sell at this super high price, and it allowed this person, this bank to get in, or this group of traders to get in, and then they push price down. Okay, this is the fight you have to look for. Now, what is essentially happening? Okay, in this particular contract, YM, we had a manipulation of those stop losses. So let's say Goldman took out a hedge fund to take their stops. They are now in control. They are the big player. You'll see that exactly the same thing happened on ES. We had the high of 2024. The stops were taken and then price moved lower. Okay, for the person who wanted to short, the big players in the market forced people to go short, then they reversed price, took them out, and then the true move happened. Now, more importantly than that, look at NASDAQ. NASDAQ did not take the high. Why didn't NASDAQ take the high? Because in these two scenarios, you had an institutional player who was strong enough to force price up and take these guys out of the trade and effectively use their liquidity against them so they can get into their own position. Whoever shorted the market here first was too strong and they protected their position. Okay, so you can say that this rejection block was them protecting their position. They did not let the market go higher because they didn't want their stop loss to get taken. Okay, these are the people who you will want to align your trades with, the people who are strong enough to protect their position. So after you saw liquidity being rated on YM and ES, it's just a matter of having a look at NASDAQ and say, look, all markets are in sync. apart from cases where someone has deep pockets and they're protecting their position. Okay, so this person forced the market down, and whoever was trying to force the market up. So let's have a look at this. So this move here, which took the stops, this was the buyer who was trying to manipulate. Okay, so there was the buyer here who was trying to manipulate. There was the buyer here who was trying to manipulate. And then let's look closely. Let's line it up. You had the buyer here who was trying to manipulate. Okay. All institutions have stop losses. So as soon as this buyer was taken out of the market and their stop loss was taken, it was game on. Okay, because now there was no resistance whatsoever, because the person who was pulling up price in order to take out people's stop losses has been taken themselves. So this is the fight you have to look at. Okay, who is in control? Who is protecting their position? Who is getting their stop losses taken? Okay, this is what SMT really is. Okay, a failure swing is a big player protecting their position. A manipulation is where one institution takes the position of another institution. So this guy here forced this person to sell in an extreme premium and then led the market lower. Now see what happened, because the person who shorted here also needs to get out the market. Okay, they're not just shorting forever. They pick their liquidity points. What did we do? This person who shorted is now out of the market once the liquidity for 2024 is taken. They've done their trade. Okay, their trade of the year happened within the first quarter. And once they're out of the market, there's no one else who is pushing the market lower. Okay, but what happened here on NASDAQ? The same story. Okay, the person who was protecting their position here also protected their long here. There is your failure swing. There is your manipulation. And here's your failure swing also. So they protected, let's see, they didn't let price go lower than here. Okay, and once these sellers were out the market and these guys had protected their position, price moved up higher. Okay, this is how the market functions. Okay, you need to understand who is in control, who is manipulating, who is protecting their positions. Zoom down to the 1 minute time frame and you will see this occur again and again. You will see two parties fighting each other, putting in more and more trades when their levels and their stop losses are threatened, and whoever has the most cash ultimately takes the other person's stop loss, and then that's when we have that low resistance liquidity run. Okay, it's not about these swing points. It's about the person who pushed up price. Had they been taken out the market? Once they've been taken out the market, then price is allowed to fall. Okay, in this case, this person who was protecting their price forced it down. In this case, this person got into the trade short, and then it was a straight line down. Okay. I teach a number of very advanced concepts in my mentorship using the golden bullet trading strategy, which works for index futures, Forex, metals, energies, and crypto. If you would like to see the kind of trades that I take, go find me on X. Okay. These are the advanced concepts that I teach. Now, this is the simplest concept, okay, but this is accessible to you within a few minutes of this teaching. I hope you found value in this. If you did, feel free to share it in your trading communities.